Okay, very quickly, we'll start with what's been happening today, and obviously the big news has been well, there's three actually main events. First, there's been the OPEC meeting, which I don't know whether there's been any kind of agreement yet. I've got my Twitter feed up here at the moment, whether they've agreed to a cut to try and support the oil price. That's obviously has an impact on the Canadian dollar, so that's been ongoing. There's been this meeting today, which is the Eurogroup meeting. And this is to try and have a coordinated response to what is happening in the Eurozone, as I said, to the coronavirus crisis. And I don't think they've come to an agreement yet, although somebody was saying that they had agreed to some kind of economic package, as it were, for places like Italy, Spain, and the harder hit countries, but that hasn't come through. The other, of course, is the unemployment claims we've had from Canada and from the United States. And these are the numbers for the United States, as you can see here, completely off the chart. I think it's since the last couple of weeks, it's now 10 million. So that is the extent of the carnage that is going on in the economies all over the world. And also we have had the same for Canada. Let's see what they are. I think it's just reported in a slightly different way in Canada. And the unemployment rate in Canada is now at 7.8. We haven't got an unemployment rate for the United States. The response from the Fed has just been basically, you go from the sublime to the ridiculous. And again, this is from my Twitter feed, and I just play this. You probably can't hear it. I think it's the theme tune from Pulp Fiction, and that's what basically has saying they're just throwing everything at it to kind of cushion the fallout from what may is going to happen when this is contained, is mitigated, comes under control. Nothing is really going to happen in terms of resolution, I'm sure you know, until we get some kind of vaccine or some kind of testing program that tells us who has it, who has had it, who hasn't. Now, very, very quickly, can I just make a suggestion? This is Nouriel Roubini. You may have heard of him, aka Dr. Doom. Well, he was certainly right this time. And I think the other one is, what's his name, the guy who wrote The Black Swan? Was it Taleb? Yeah. He was always so they're probably the two leading forecasters of this, what could happen if this situation ever came about. What I suggest is he started this new site called nourieltoday.com, and forget this about pre-purchase one, but he actually did a broadcast on the 1st of April. Which is a few days ago. Oh, I can't find that. This is having all sorts of problems here, but it is still available, and it's about a 45-minute presentation. And basically, he talks through what has happened, where we are, and where he thinks things are going. And he basically has two options. There are two options. There are two routes this is going to go. We're either going to have a very, very deep, what he calls a greater recession, or we're going to have a depression, and that is basically it. And we won't know that until everything around the pandemic is more or less under some kind of control, and things can return to some kind of normality. But if you're interested in it, is somewhere on the 1st of April. I did manage to see it. I think this one on the 8th, I think he charges like $10, so it's peanuts. But if you want to listen to Roubini explaining, then head over to his site. Right, what was I going to talk about? Yes, VPA, volume price analysis. Integrated into volume price analysis is our Wyckoff's three laws: the law of supply and demand, cause and effect, and FV results. But VPA is a price, volume, candles, candle patterns, and time. And as part of the time, we talk about multiple time frames. In our session on Tuesday, what I started to talk about, and something I'm going to develop in the webinars to come, is using multiple time frames, and how what is happening in a slower time frame is going to some extent, dictate the kind of price action that you are you are likely to encounter in a faster time frame. And also support and resistance is a huge part of volume price analysis and technical analysis and trading generally. How you determine that support and resistance, whether it's price-based or volume-based, we happen to have both here. How you incorporate that, and we also have something called the Camarilla levels, which those of you who have the quantum package will know about anyway. And there's a question down, someone says, well, you know, what do I mean by that? And the best way I can explain it is to actually illustrate it. And I have here the chart of the Aussie dollar, and I've also got the pound New Zealand on my other platform, but it really doesn't matter because this is applicable to whatever you are trading. Now, if we look at let's look at the daily chart, and probably the daily chart is as good as any to take. What we're looking at, what are we seeing on the daily chart? What we're seeing on the daily chart for the Aussie dollar, could be anything, is in fact we have seen a break. This instrument is now in a discernible trend. It's had, you know, 3 nice up candles. Let's forget the VPA element at the moment. Just look at it from the perspective of price. So we can see here this is in an uptrend. It is in some kind of trend. It's not in congestion. It is in some subject. What is that going to tell you? What is likely to, what kind of price action you are likely to get in the faster time frames? And the best way I can illustrate that is with the Renko. What that basically tells us is, because it is in a defined trend, it is not whipsawing, it is not choppy. When you are looking to take a trend in a faster time frame, you are going to get corrections, you are going to get pullbacks, but that trend is likely to be maintained. So where VPA will come in, volume price analysis comes in, is when you do get a correction or you do get a pullback from that primary trend. So if, let's say, the primary trend for the Aussie dollar at the moment is up, it's going higher. In the faster time frames, you will get pullbacks, you will get corrections, and what VPA will do is will tell you whether, confirm that they are just a secondary or minor trend before the primary trend is then re-established. Now, you as a trader who are in the faster time frames, by using the faster charts and a non-time-based chart such as a Renko that we have here, you will then have to wait until that secondary trend, that minor trend, that pullback is confirmed with VPA, then it moves back up, and that's when your support and resistance comes in. That's when your support. So when price breaks through a significant resistance, because we're going higher here, then you could be looking to take a trend to the upside. And we've got a really nice example here. These are the pullbacks, then it tried to move higher. It doesn't mean it'll always go in a straight line. And yes, that could have been that would be a trade that possibly you might have had to taken a few pips out, possibly not, because the way you use the indicators on the Renko is you look at the trend dots and you look at the trend monitor, and when you get this match between the two, that is a potential entry. You look at your support and resistance. That is the resistance across here that you can see on the and we know this is likely to be moving higher. So on this pullback, and by the way, some of the corrections and some of the pullbacks that you have in the faster time frames, if you're trading very fast, David has the seconds charts up. Are they tradable? Sure, for sure, because you may be only looking for a few pips. But if you go back to, let's take sort of minute charts, not the very fast charts. Once you get these pullbacks and you get this little bit of congestion, you can see here there's a little bit of congestion there, which is also shown on the time charts. Once the trend starts to go, it will go. Now we're seeing here a little bit more of congestion, but can you see there has been minor little pullbacks. This has stayed bright blue. That has transitioned to a dark red, but not a bright red. All the trend dots, apart from these little red ones here, but there hasn't been a match. It looks like this wants to go higher. And then you use your time-based charts for some kind of idea of where this is going to go. So this is the Aussie dollar is a nice, when it's in this type of price action, it also, the risk is less on the trade, because you're not going to be whipsawed. That something might happen and suddenly reverse it. That's fine. I mean, you know, in trading, nothing is certain. But when you have a slower time frame that looks like this on a daily chart, your life down at the faster end of the spectrum is that much, little bit easier. By contrast, if we look at the pound New Zealand, and I want to look at the daily chart again, if you look at this daily chart and you think, right, first of all, you have these two enormous volatility candles. You've got one here and you've got one here. And in general, this is, although you've got a discernible, trends within the congestion, I'm not denying that. In the main, this is within a congestion. And we know there's also a lot of whipsawing here. And how do we know that? Because of wicks to the tops and bottoms of the candles. There. Slightly, not such a wide range there, but a lot of whipsawing going in there. That's not too bad. That one, and then today, it's pound New Zealand's not been too bad. But when the slower time frame charts looks like this, what does that tell you? It tells you that in the faster time frames, you're going to get a lot of choppy price action, and you're possibly going to get sometimes what's called good two-way price action. I mean, you take a candle like this, the range of that candle, there would have been trading opportunities to going to long and going to short, but because it's whipsawing, because it's probably moving a lot faster than something that is going up to the long side, and when markets go up, they always tend to go up much slower than when they're falling or when they're whipsawing around. You are going to be taking on more risk, and if you are going to be in a trade, you're not going to be in there for very long. So that's how you tell the kind of trading experience that you are going to have in the faster time frames by looking at the slower time frames. And yes, support and resistance will be absolutely crucial to whatever time frame that you use. Right, bit of a long explanation about that, but I hope that clears that. And then what I'm going to do next time is really just look at it more, just not go over the explanation again, but just say, right, this is what's in the faster time frame, on the slow time frame. This is what we're looking at. This is my expectation. This is what my Renko's telling me. And in fact, the Aussie dollar that I have here, this is the Renko version. This is on Ninja 8, and we can see this this big consolidation phase. And in the consolidation, areas of resistance are being created because the price keeps touching it. The pivots are fantastic. They are demarcating the congestion area. The good news is this is the camera. It's actually broken through the R4, which is a significant level. That's what we want if it's going to go higher. And where is it going to go to? Well, the R5 is 0634. Let's have a look. 3400. Yeah. So this, all things being equal, but we're coming to the end of the trading session. We're coming towards a holiday. If this was like 10 o'clock in the morning, you think, yeah, great, there's going to be a chance that it's going to get there. It might still get there, or depends what happens in the other markets, because the Aussie is obviously a sentiment currency and obviously an important commodity currency. So that's it. That's all I want to say on that. I'm going to pass over to David. If you've got any questions on that, just, yeah, what do you want?